Welcome to Knockout Crypto. Thank you for following our channel. You can find us on Instagram, Twitter, and YouTube. We're going to pull up our Twitter for you guys so you can find us. Twitter, we're at Knockout Crypto. Knockout Crypto, building better crypto investors. Subscribe to us on Twitter and Instagram, okay? And YouTube, subscribe to the channel, okay? I want to just go over this article with you guys. Fidelity crypto chief says hard fork may delay firm support for Ethereum. Also, Fidelity Digital Assets is live now. And I think you guys should know that they also have a Twitter page, Fidelity Digital Assets, institutional solutions for a new asset class. Basically, Fidelity is holding Bitcoin for customers now. They put out this tweet about 12 hours ago. We are live with a select group of eligible clients, and we will continue rolling out slowly. Our solutions are focused on the needs of hedge funds, family offices, pensions, endowments, and other institutional investors. More on our project here. So the head of the Fidelity crypto chief says hard fork may delay firm support for Ethereum. Fidelity Digital Assets, FDAS, will take its time about adding support for Ethereum, the executive in charge of the new platform said. The digital asset trading and custody branch of Fidelity Investments, which went live this quarter, has developed an internal framework for evaluating any cryptocurrencies that may be added in the future, according to FDAS President Tom Jessup. While Jessup has previously stated that FDAS might look to add Ether or other cryptocurrencies, he told Coinbase Thursday that the process to do so may not be cut and dry. We are currently supporting Bitcoin. We have designs to support other coins over the balance of the year, centered to various criteria, including our in-house selection framework, where we obviously look at client demand and other things, he said. This framework looks at how decentralized a coin is, what the client demand looks like, and whether there are any peculiarities about the protocol which would make it difficult to launch or continue to support a given cryptocurrency on FDAS platform. And so far, at least, client demand has correlated tightly with market capitalization, Jessup said. We will probably go in the market cap order. That's what the demand is, but it doesn't mean that we will list every coin. There may be reasons why we won't list a coin that have nothing to do with, quite frankly, client demand. As one example, Jessup pointed to Ethereum, currently the second largest cryptocurrency by market cap. He explained, "We'd love to have support for Ether, but you have a hard fork coming up and some upgrades, so I think we're trying to see how those things work out before we make a decision to put them on the platform." The recent Constable hard fork implemented a number of upgrades to Ethereum, including lowering the Ether block reward, as well as a few other technical changes. Another one called Istanbul is tentatively expected in October. Part of the challenge is ensuring that FDAS can protect investors, Jessup said. He cited another cryptocurrency, Ethereum Classic, as an example of a project that would require an in-depth risk assessment due to a 51% attack the protocol suffered earlier this year. Jessup did not provide any sort of timeline for when new assets might be added to the platform. Looking ahead, Jessup said FDAS plans to scale its business over the rest of 2019 and wants to cover 90% of the market in the U.S. by the end of the year. This scaling will include both securing regulatory approvals such as money service business license, as well as continue to work out any possible bugs in the platform at present. Despite crypto winter, the market is still pretty robust, and we are excited about that, he added. The goal for the rest of the year is to scale the business in terms of adding new clients and expanding the scope for offering for trading execution services. We can say we're live, but it's also a function, honestly, of where we have jurisdiction authority to operate. While Jessup declined to say which states FDAS currently has licenses in or even how many, he said it's a reasonable number, and the firm is continuing to work on acquiring licenses through the rest of the year. We're still in the process of collecting licenses to do business in multiple jurisdictions, he said, but we're very encouraged by the progress we've made so far. Moreover, he added, we continue to pursue status as a qualified custodian, and that is still in sight for this year, and it's really been a priority we have. While FDAS is looking to secure state-level licenses, Jessup did note that the company is prioritizing the states which have the largest market shares rather than focusing on every state at once. Client interest. Fidelity has seen a significant amount of demand since its announcement in October, Jessup told Coinbase. With a wide variety of firms expressing interest, everyone from dedicated crypto funds to hedge funds, family offices, and intermediaries, and even individuals looking to launch their own private fund products based on crypto have reached out. FDAS has also received interest from exchanges hoping to offer clients custody through Fidelity. I know in terms of assets under management, it's anywhere from low single-digit millions up to tens, if not hundreds of millions, he said, the potential business from this channel. The company surveyed various types of funds as well, finding that interest in crypto investment has remained consistent across the different types. Jessup explained. We've seen consistent interest from institutions, I think largely because institutions have been doing their homework and returned to understand the space, and quite frankly wouldn't make a decision to invest at any price until they really understood their own personal investment thesis. Included in Fidelity's survey was among some of pension funds, and while some have asked questions about allocating capital, Jessup said he does not see any others actually committing funds to the asset class, apart from a previously announced investment by Virginia County Retirement Fund in a Morgan Creek vehicle. So it's very interesting. Fidelity, like I said, Fidelity wouldn't be doing this if there wasn't significant institution interest. I think if you read this again, this sentence right here stands out. We've seen consistent interest from institutions, I think largely because institutions have been doing their homework and returned to understand the space, and quite frankly wouldn't make a decision to invest at any price until they really understood their own personal investment thesis. So there's a consistent interest from institutions. That really stands out. That even though we're in crypto winter, there's a consistent interest. Let me know what you think about the article. What do you think about Fidelity Digital Asset Services and where they're headed in crypto? So these are institutional solutions for a new asset class, Fidelity Digital Assets. Let me know what you think about this. Guys, thank you for following Knockout Crypto. Subscribe to the channel on YouTube, Twitter, and Instagram. Subscribe to the channel on YouTube, guys. Go to knockoutcrypto.com to get the next big crypto report. Go to knockoutcrypto.com to get the next big crypto report. Thank you for following the channel, guys.